to the chip sector. Chris, talk us through that in the alert that we sent out just yesterday. What are we thinking?
Yeah, so the chip sector is we have to keep an open mind on that because we recognize that just generally speaking, chips are increasingly part of the fabric of our digital lives, right? They power just about anything and everything from the devices that are allowing to do this with members today to the smartphones that we have. They're found in our refrigerators, they're found increasingly in our cars and elsewhere. So we always have to keep a very open mind on here, but we also have to pay attention to the different end markets. So, right now, there's a lot of concern about continued excess inventories in PCs, weak demand for smartphones. That was all amplified by Micron when they reported their quarterly results right before the Christmas holiday. They actually see the PC and smartphone markets remaining weak through the first half of the year. So for that reason, we're kind of taking a very cautious approach. I think on the last members call, someone asked, hey, what would it take for you to get interested in the chip stocks? And here too, the answer remains the same. We are going to want to see, the industry inventory levels stabilize. That's when we'll know that the bloodletting is over and we can start to see, fresh demand kind of, pull through. But I think we're going to get a lot of mixed messages in the near term. I alluded a few minutes ago that IDC doesn't see the PC market rebounding and now until 2024. So I think we're going to have to really go data point by data point to uncover when the bottom is in. Then we can start to think about adding back some of the chip companies. I think Bob and I have talked about this. Are we interested perhaps in a Qualcomm as it expands into the automotive market? Possibly. Do we like Marvell because it's more infrastructure related with its end markets, not really tied to consumer? We think so, but we're not there yet and getting ready to make a move with those names.
And what about Qualcomm in particular, Chris? How do you feel about that? One of our
So,
members is asking.
Qualcomm's a great company. They have, again, that very differentiated business model where they not only sell chips, but they have the IP licensing business, which is extremely profitable. It really does account for quite a bit of its overall operating profits, cash flow, and its ability to continue to increase its dividends. So we really like that. The issue here in the very short term, continues to be overly wed to the smartphone market, and we know that there's a ticking clock on when it's going to lose the Apple business. So we have to make sure that the timing for the automotive business coming up is good. The timing of its IoT or Internet of Things business is big enough to offset any downturn from that Apple iPhone business. So we still have to put some more pieces into the puzzle so we have a clearer picture of when to act. And when we do, we will.